Hey, it's Monday, the 7th of March. I haven't done some videos for a while, so I'm going to do a few today. Got to look at commodities. Gold is absolutely through the roof, of course. Oil is through the roof. Silver is through the roof. It's pretty crazy. Right, let's shrink myself down here so that we can look at the charts. Right, gold has hit 2,000. Big round number. That's the high for the day, but we're hovering just below it, 1995 as I speak to you. I've already littered my screen with some Fibonacci levels. At the moment, we're just in such a powerful bull trend that really that's what I'm relying on right now to figure out where the levels are on the downside, at least, should we fall back. Of course, we're in such a strong bull trend, and there is continuing tension in Ukraine. So for me, as I've been saying for a number of days and weeks, it's a buyer's market in gold. So if we do see weakness, we are buying into support levels, and that strategy certainly has worked. Now, really, the big level is clearly around the low of the day, and I'd be surprised if we actually revisit that, to be fair. But if we do, we had a gap high this morning. The high on Friday was 1970. The last trade was at 1968, and then today the open was at 1976. So we gapped higher. So clearly some pent up buying. Buyers are prepared to pay more than the high price on Friday. They were so intent on getting gold on the open. So clearly there's a lot of fear out there, and gold is the safe haven at the moment. So gold really looking very powerful. 2,000, well, it's quite a big psychological level, isn't it? So maybe that's why it's holding at the moment, but I certainly see no reason to short gold. That wouldn't be a good idea at all. If we were to drift off, clearly we do have a really good support level at in the low 1970 area, 1973, 1970, which was the high on Friday. If we see that level, there would be a very good chance for bounce from there, in my opinion. Anyway, if we go down, we've also got a lot of support around sort of 1955, 1950. I don't think we're going to see that level for a while, but those would be my two big levels for the day. When you look at the weekly chart, you can see we're just powering ahead. We're straight through the 2021 high, which was at, if my charts would be kind enough to tell me, there we go. Whoa, where are we? It's not working very well. 1959, so well through there. Well, we closed for the first time above there on Friday. Actually, we had peaked above there before on the week before, but of course we couldn't sustain that. There was that shooting star candle on the weekly chart, which did make me wonder whether the gold would actually turn around and go lower, but it certainly did not. And now that we've beaten that level, we're up through this high, which was 1965, and we're through this high, which was 1991, holding above there at the moment. So this peak up here, which has got this long upper wick, is at, where are we? Come on. 2014, 2015. That's my next target. Silver not quite so impressive on the upside, but certainly we've beaten the last 2 weeks, the high for the last 2 weeks, and that big fib level around sort of 25.65, 25.70. So this all looks pretty positive. It's a bit more of a slow crawl in silver, but we've beaten all the resistance levels on the weekly chart, and I think on the daily chart it's going to show us how, yeah, the moving averages are starting to cross over now in a bullish way. The 50-day moving average crossing over the 100-day moving average, which is bullish. We're powering away after breaking above that trend line, so it all looks pretty positive in silver, despite the fact that we are getting into overbought territory. I would still be a buyer on weakness. Now, oil is scarily high. A massive gap this morning, a massive gap. We had a high on Friday of 116, which looked pretty good in itself. 116.57 was last week's high, and we pulled back aggressively from there. But that minor negative candle had no follow through whatsoever. And on Friday, of course, we soared back up to retest that high. And look, massive gap. You know, the close on Friday was around 115.68. The high was 116.02. We gapped open at 121, so we gapped $5 higher. That is how aggressive the buyers were this morning or on Sunday night, as the market absolutely roared. Right, we got up to $130. We pulled back to 123.55. But to me, this looks way too scary to even think about a short position. So there we have some fibs. Let's put them on. Where should we go? We'll go down to here for the 68.1.8. This just gives me a sort of roadmap for where the support levels will be if we see any significant moves to the downside. That's how I would draw them anyway. So clearly we're around the 23.6% fib, or the shorter term 38.2. That's around 120.70. So let's call it 121.001, 20.50. That looks like it could hold the downside. If we get any lower, we're looking at 117.90, 117.80. Big support down at 115, well, really sort of 116.00, 15.50. I would have a stop below 114.00, but I'd be surprised if we get down that far. If we did, then we might have a very big negative candle if we were to close that low on the day. I don't see that happening. It looks like the bulls are well in control of this market, and we've just absolutely rocketed since, of course, that Russian invasion. We are up $25, $30 at least. Looking at the weekly chart, again, no reason to suggest that this market, actually we need to look at the monthly chart. There's no reason to suggest that this market is going to stop at the moment. Nothing to indicate that. We could be going as high as, well, the previous peak was 147. Could we get to 147? We're through this 130.00 is this peak here. So that was in 2008, the last quarter of 2008, the 30th of September anyway. So the last week of September, we're holding that. If we can get up there, it's 135. It's $140 to $145 is the next target. But for me, as long as we remain above 117.00, this looks really, really promising for oil, and scarily high. I don't know. I do worry about the repercussions of such a high oil price on the economy. Anyway, nothing we can do about that. So good luck with that. Very, very volatile markets. You're very brave if you're trading commodities. I must admit, I'm leaving them alone at the moment.